Good evening, Nick Inman from VolumeProfileTrader.com on Wednesday, July 25th. And this video is probably going to be a bit short. It's the only free time I have right now as I am taking care of my dog who literally, he had herniated disc in his back and he can't walk. So it's a little bit of maintenance right now. But you got to do what you got to do for your dog. So, here I am doing an update, giving you sort of a detailed view of the S&P, maybe a few other names, but I won't get into too much detail as far as, the amount of names and going through individual names. The S&P should be good enough. So, the top of this high volume area, 1372, has held again. We've seen a double top off of this level. We see, some trend line resistance. However you want to draw it, this is now officially a trend line, and that is holding as resistance. The only thing that's keeping up this market right now is the volume that we've seen from the last couple of months, and then from the month, it looks like January. See some price action there. That's what's holding up this market. Otherwise, it looks a little top heavy. And the reason why I say that is because if you look, and I'm looking at this volume profile right here, the majority of the volume, and I'll zoom out so you can see the whole thing. The majority of this volume is from 1338 or so up to 1373, and without a doubt, that is the most volume in this profile in one chunk. We definitely have some volume down here. It starts at 1328, goes down to about 1320 or 1321, and then 1310 and so on and so forth. But it really ends right around 1300. Nice round number. It looks like we have a 233 simple moving average, right at that level too. So what you can conclude from this is we're going to see a move one way or the other significantly in, out of this 75-point balance range. And it's going to be significant enough. I'm assuming it would be, at least 60 to 70 S&P points one way or the other. I would be aiming more towards 100. So we're just going to have to wait and see what happens. I wouldn't put too much into it. I just trade the extremes for now. And you can see 3 days in a row down, one with, showing some type of support down at these lows. That's something, that's just the flow of the market. But if you want to get an idea of where it could potentially go, you zoom in a bit. Let me delete all of these drawings so we can redraw them. Okay, so what's gone on recently? Remember on Monday we gapped lower, and even Friday we gapped lower. But Monday we gapped lower, held this support level, which you can see the amount of volume that started to build up around this 1331 level, 1332. I classify that as pretty much a level of support that you want to see the buyers hold. But basically, we traded up into this high volume area, the point of control for the month, sold off, basically made a double bottom. You can see, from last month, we have volume it starts up at 1327, which you can see every time the S&P has been below 1327, it's been a buying opportunity, and that's simply the top of this profile right here. The top of this high volume area here. You can also see it's pretty much the bottom. After 1326, volume falls off a cliff in this current month. And one other thing to mention is, we are at the end of a month, beginning of a month, so we should see some type of move just because that's what usually happens. End of month, beginning of month, you get some type of vertical development normally in the markets. So that's something else to look out for. Basically, this is how I see it. Monday's gap lower. If we can't recapture this 1342 to 1350, I should say, if the S&P can't, if we cannot get above these levels, I do think you want to be staying on the sell side of things, at least with that as your reference point. On the downside, I think you look at the top of last month's high volume area. We'll do 1322 because it includes May's profile too. That's the top of some major volume. You can see it here. The bottom of it, we'll go 1306 or so. That would be kind of your downside, target if you're looking to be short this market. If you're looking to be long, then you just go off of these levels. Regardless, your job is just to manage your risk off of those levels. Now let's look a little more in depth, see what's going on. You had some good volume off of these lows, and you can see it was good enough for a pretty good trade up to the point of control for the current month, which is 1348 or so. We stabilized on light volume, and then yesterday we had 3 big selling bars in a row. Then we lightened up, and that's basically where we bottomed. We had a late day sell-off, it looks like. I wasn't around, so I don't remember. We had a late day sell-off on light volume, so I wouldn't put too much into that. And notice, the market gapped up today, moved lower on, pretty good volume, but where did it find support? You remember that light volume bar that we saw relative to the buying bar? Here we are basically at those tails here, and you see reversal. I'm sure if I zoom in another time frame, okay, I know this is a little messy, but I just wanted to point out, let's see, overnight, here's the pit session starting 9:30 right at these lows, make a push higher, double top. Basically, you see this huge chunk of volume from yesterday. The point of control, that high volume area was pretty dang good resistance today. Sold off from those levels twice. And, but notice where we found support, looking at this high volume area here, I'm looking right here from yesterday, ignore the overnight. Here we come down, we test it at 10 o'clock, and we don't look back. We get above that level and then push higher back to these, this level here. So you can see this light volume here. The market did a pretty good job today looking at current profile at filling it in. And that's something that is important to take note of because that's your job as a trader, is anticipate levels to trade off of and then trade them. So overall, I do think that you can still have a negative view on the market. However, look at something like gold. Gold, this is the future, it's a daily chart. You have lower highs and higher lows, triangle pattern. And what do we get today? We have a big volume push right to the top of this range. I'm really expecting gold to try to push up towards the 1630 level, which isn't that far from here, to 1640 or so. But one thing I want to be aware of as, one who's long gold right now is this potential trend line here. Basically, let's say gold breaks out and has a run. It's going to correlate right at the point of control of the year. That could be a potential, selling area, and whether it's a good one, I don't know. But right here, right now, it looks like gold has a shot up, a good $50 to $70 potential. And if that interests you, I do think that you can look at these lows. I said 1570 on Twitter today. Basically, what you're looking for is this huge move we had today. It's okay if we retrace some of it and then break out. But you don't want to see it come all the way back down to these levels right here. And considering it's only 30 points, so about 2% on, gold, that's a pretty low risk bet in my opinion. And I think it does have some potential to the upside. And that's what I think is important to take note of. Also, on this, this 1 hour chart, you can see even on a 1 hour where, let me get the trend line. All right, we had lower highs right at, this huge high volume area that formed. And then all of a sudden we pop up above the high volume area, hold it, and continue. That should be a recipe for a move higher. And I do see this chunk of volume here up at 1617 to 1624. But given the amount of volume, we have to look at it on relative terms. Given the amount of volume that we see right here, relative especially to this 1620 level, I would expect a powerful move up towards 1640, 1650. And the reason why is because there's a lot more volume supporting a move higher. Let's say shorts getting squeezed. Well, that's a lot of shorts that I've built up in this, say 1600 to 1570 time frame. Price level. And it's gone on for 3 months now. So, we should see a significant move and nothing too small. Another one to look at is silver. This is silver futures. Now, I have to say the target here is around 28, just above 28. But it looks like it's breaking out from this downtrend here on pretty good buying volume. What you want to see is a break above, say, 27.5 with pretty good volume. You don't want to see a light volume breakout. You want to see a big volume breakout. So I think plays are silver and SLV and GLD. I think those are two names that you can look to buy on weakness, and you place your stop basically back in the lower end of the current range that we've seen. So, my dog's starting to whine, so I have to go. But hopefully this gives you, pretty good analysis of what's going on in the market.